Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Riya Singh, Currency Technical Analyst, joining in. Riya, a very good morning. My first question coming to you is with what's happening with regards to where the rupee is concerned. One factor that we're considering right now is with regards to where the current account deficit is concerned, and that's actually swinging, pretty much to a rare surplus right now. What's the sense that you're picking up on that front, number one? And secondly, if you see with regards to where the lockdown is concerned, now that is getting extended as well in the varied parts of the country. So, taking all of these cues into consideration, uh, what's the kind of impact that we're seeing with regards to the Indian rupee?
Good morning, Eril. So, if we look around, like you said, the CAD is headed for a surplus right now. We even picked up this point into our previous discussions, when we were talking about the CAD and the various factors that could, affect the rupee into the coming sessions. So, yeah, we already talked about the surplus thing, but the numbers that came out, and there is a surplus of around $0.6 billion, or 0.1% of the GDP into the Jan March quarter, versus a deficit of 4.6 billion dollar, which was there as compared to the last year, according to the statement that the RBI has uh, released. So if you look at this scenario, where the CAD is coming to a marginal surplus, it is mainly because there is a trade deficit that is happening. The export has halted because of this pandemic situation, and it is clearly reflecting into the CAD balance. And also, if you look at the net invisible receipt, it is amounted to around 35.6 billion compared with the corresponding period of the last year. So I think this is what is actually getting reflected into the surplus that we are witnessing right now. Also, there is positivity because of the falling crude oil prices that we saw. So that is one of the the positive thing that is reflected on the bills, being India being the satisfying the demand through majorly through imports. So I think these two factors is what has resulted into the surplus of zero point 0.6 billion, the falling exports, increasing in the net invisible receipts, and also the falling crude oil prices. Uh, Now coming to the lockdown measures, obviously, we did heard that there has been an extension on the lockdown till July 31st, and there is a phase two of the the upliftment of the lockdown into the areas which are not into the hotspots. But talking about these, lockdown measures, extension or upliftment into the hotspot areas, I think the major side that we are forgetting is the supply side. Uh, there has not been much revival on the supply side nor on the demand side. There is still a very you know uh, the rollback of the restriction is taking longer than as signaled by the government. There were hopes that there will be start of the at least domestic flights and rail. But if you look at the momentum at what these restrictions are getting uplifted, it's actually on a very smaller pace. So reversing these declines, uh, with respect to the demand and supply, I think it's still very suppressed, and it will definitely have an effect on the economic numbers that will come out. So taking these two into consideration, if you look at the rupee momentum, it has not been much, even in the yesterday's session. But obviously, RBI is working toward not letting the rupee depreciate much, as we have already discussed it. So I think into the coming session, the rupee will be at around the maximum depreciate that it can get is around 76.40. I'm not seeing much of that depreciation coming in, at least in this month. We are in the start of the first day of July. So I think for the July expiry, I'm not seeing a depreciation, even if there is a reversal from this momentum going much further than 76 to 76.45.
Right. So that's with regards to where the rupee is concerned. Now, you talk about the dollar index as well. Now, if you talk about the Fed debt expansion, that's something which is actually going to help their economy in terms of recovery. Now, we are looking at the Fed expansion since quite some time now. So, what is going to be the impact on the dollar in that case?
See, if you look at the expansion of the balance sheet of the Fed, now we must see from the March, okay, the Fed has been pretty aggressive with respect to infusing liquidity into the market. Now, how do the central bank work to provide these liquidity? Either they do something with the interest rate, they bring down the interest rate, or they pump in money through buying the debt, corporate debt and such a secondary market facility that they provide through the market operations. So I think if you look at the Fed momentum of expansion, its balance sheet, it's quite aggressive
Correct.
as compared to the 2008, fiasco that we saw. So I think, but is this the temporary solution, or how will it affect into the long run? Because it is constantly buying up the corporate debt, and what is doing to raise the money in order to buy these corporate debt is provide the market, or borrow from the market through these treasury bonds. So these so the question remains, will these extension of few months will aid into the Fed borrowing? Because see, if you look at the borrowing method, by providing a treasury bond, it is giving it is raising the money in order to buy the corporate bond, or infuse the market into the infuse the liquidity into the market and help into the economic recovery.
Right.
So obviously, doing so, it is providing the market with the you know uh, uh, with the loan that it requires in such a depressed economy, where there is where there is low demand, there is a suppressed supply chain. But if the major demand sector, the restaurant, the retail sector, where the shutters are still closed off,
Mm.
what will they do with these loans
Correct.
unless the shutters comes off? So I think that is a major thing that we need to keep in mind with respect to the Fed
Mm.
debt is concerned. So I think going forward, the two major things that we do need to look into it is how far with these borrowings will aid into the recovery into the US economy. Because if you look at the statement given by the chairman Jeremy Powell, is there has been a recovery into the economy. The unemployment numbers have seen improvement, but the major downside or the major hit segment, the patch, is the laborers which are low wages. So
Mm.
there is still around 20 million people that are still unemployed in the US. So the numbers are coming positive, but there is a lack of momentum there. The pace is not very much attractive, and obviously, if you look at the statement released, there is still uncertainty as to how this economic recovery will take place. So I think the uncertainty risk is still there. Even though there is lot of liquidity, the supply is still the demand is depressed, the supply chain is still not very good. So I think going forward, how much it will affect dollar is something of a concern, because once the economy comes to track and there is a good numbers coming up, obviously the safe haven will lose its momentum.
Right.
So I think going forward, if you look at the dollar, I think it will the dollar index can get back around 100, but I'm not seeing going it beyond that, beyond the 100
Right.
mark.
Right. So, Ria, with this, what would be the strategies that you would recommend for today?
I think by looking at the momentum that we saw into the rupee, obviously the first thing that we can do into the rupee is go for it is actually into a consolidation phase from past quite a session. Let me just share my screen.
Mm.
So yes, if you see at the momentum of the rupee for the July expiry, it has been quite into a consolidation phase for almost 4 to 5 sessions, and we are still uh, having a quite strong resistance at 75.95. So sorry, if any reversal that it might come into the rupee will be above 75.95. So if there is a breach of 75.95, go for a long for 76.25. I think 75.95 resistance breach will definitely pour into the weakness for the rupee, and it can depreciate towards 76.25. So that is a cue for going long into the pair. And if you look at the supporting technical indicators, relative strength index, and the stochastic, it is giving an early signal, but it's still not confirmed. So be cautious while trading into the rupee for today's sessions. Look for a breakout of 75.95 to go long into the pair. And in order for a short, I think it has to be 75.65 support that one should look out for. So look out for these two levels in order to trade into the rupee for today's sessions. The next that we can go is we are seeing quite a weakness into the pound right now, and I think it will continue because even if you look at the Euro USD, it is coming down quite a bit. So there is still weakness that we can see. It is still giving a gap down. So any breach of 93 will definitely give a bearish momentum into the pair. So you can go for a short into pound rupee for below 93 for the target of 92.80, 92.60 for the coming session. The next momentum that we are seeing is into the Euro INR. I think even Euro INR has been into a consolidation phase for quite some time, for at least 4 sessions, but we are seeing quite support levels at the around 84, 84, 96, 85 is supporting into the pair. So I think look for a breach of 80. 520 to go along into the pair. Obviously that's a longer range, but it will be a careful trade to go for. So look for a breakout of 85.20 for going long into the Euro INR for the coming sessions. So these are the strategies that one can follow for today.
Right. Thanks, Riya, for sharing the strategies as well and getting us to understand the impact as it has turned into a current account surplus at almost 0.1% of the GDP in the fourth quarter. And this is for the first time in almost over a decade that we've
Yes.
seen something like this. Well, thank you so much for being on the show, and thank you, participants, as well, for joining in.
Thank you.
Right. In fact, Riya, if you could just stay by for a second.
Yes.
Yeah, there is a question coming in from Anup Sinha asking for if there are any option strategies.
Option strategy, I think if there is a breakout, if you see a breakout of 75.95, go for a call of 76. You can definitely go for a call of 76, though it will be at some premium, but I think that will be a safer bet to go for, and it will be a good bet. So 76 call is something to look out for if there is a breakout of 75.95 into the future contract.
Right. Thank you so much for taking that query as well. I hope your query is answered. Thank you so much, everyone, for joining me.